Hello and welcome. You're with us here on Business Today TV. I'm Abha Bakaya. Here are the day's top stories. Are India's income taxpayers set to see some relief in Budget 23-24? Revenue Secretary Tarun Bajaj, in an exclusive interview with Business Today TV, says there is need to tinker with some tax provisions, may give relief to some, not to everyone. Revenue Secretary Tarun Bajaj on the possible changes to India's capital gains taxation policies tells Business Today TV in an exclusive interview that asset classes and indexation rules need to be simplified. Air India and Vistara to merge by March 2024. Singapore Airlines to hold 25.1% stake in the combined entity. The new airline will be the second largest in the country after IndiGo. Stock markets hit yet another high but end substantially below the day's highs due to profit booking. FMCG and metals lead the rally. Sensex up 177 points, Nifty up 55 points. Reserve Bank of India to launch retail testing of the digital rupee on Thursday. 8 banks to participate in a pilot project which will initially cover 4 cities. Next year's budget, the last full budget before the general elections in 2024, could be the harbinger of big tax reforms. In an exclusive interview with Business Today TV Managing Editor Siddharth Zarabi, the Union Revenue Secretary Tarun Bajaj has hinted at changes in the income tax and capital gains tax rules. While the full interview is available at the Business Today website and its YouTube site, here's an excerpt.
I would say that we have done a lot of reforms on the direct taxes. The corporate tax have been brought down to 22%, and new manufacturing units that are set up to 24 March will only pay 15% tax. So that's a good, it's stabilized. Maybe some reforms are needed on the personal income tax also, because the tax rates go up from 5% to 30%, and then there are a number of surcharges there and a lot of exemptions are there. So maybe we need to tinker with some of these provisions. It may give relief to some people and may not give relief to some other people. But yes, there is a need to simplify the tax rates. There is a need to simplify the process of the personal income tax. Now, if they say a relief, I don't know what exactly CII means in terms of relief. Because if you look at tax to GDP ratio for our country, we are still very low. And there's a need to have more taxes. But yes, I agree to this front, and I am of strong view that our taxes should not come from increasing the tax rates, but from expanding the tax base. So our effort should be there. So all these efforts in capital gains tax also, we need to do something on that. If we do all that, I think it will give relief to some people and also ensure simplification of tax rates.
Since you spoke about the capital gains point, and this is being talked about earlier also during the year, what is the meaning of, for the benefit of our viewers, what would this approach imply where you, and just now you also spoke about the need to fix capital gain on various asset classes, because there is a divergent approach which has built up over the years. What would you recommend as the approach?
Okay, before I answer that, I'll also supplement my previous answer because you had put a supplementary there. I think also we need to understand that not too many people in India pay taxes. When the returns filed may be going up, but there's a large proportion of people who file their returns up to the limit, say up to 5 lakhs or 6 lakhs, 6.5 lakhs, 7 lakh, up to which there are no taxes payable by them. So this would constitute about 70 to 75% of the taxpayers. So I would say that, and the middle class numbers in this country is much larger than, say, 1.5 crore. So I think I just wanted to also bring that perspective into that. On the capital gains, what you have said is very right. For example, today we have various asset classes, and even within the same group, say financial assets, somebody says that if you put in debt mutual funds or you put in debt directly, it is capital gains are different in the two cases, and there is a demand from the industry or from the capital market that we need to bring uniformity into this. So I think There have been various articles which say in some cases we get benefit of indexation, in others we don't get benefit of indexation. In some cases, as I told you, for 1 year, it's 1 year and below is short term, 1 year and above is long term. In some cases, 3 years and above is long term, below that is short term. So I think there's a need to think about it, simplify this so that there is no arbitrage created between financial products because there's a tax advantage. The product should sell based on its strength rather than on the tax arbitrage. So today, maybe we have created those tax arbitrage. I just read it in the papers that the industry is also saying that there's a difference in taxation between ULIPs and mutual funds. So all these things, corrections, if they are made, I think that will make it much more stable and much more progressive than what we have today.
Corrections in one go or spread out over time?
This is something which the budget makers will decide this time. I'm not part of the budget making exercise, but if you ask me my own opinion, I would say that if you are doing a correction, you should do whole stock rather than doing it bit by bit, so that there is clarity. Because people who are coming into the capital markets are also big people, FIIs, FPIs, the mutual funds. So they should know in the long term that this is what the regime is going to be, and this is going to be stable for the next 10, 15, 20 years.
What about, and you spoke about it, I just want to take that point forward, short term versus long term. Ideally, from a policy planning point of view and to encourage savings and wealth creation, I believe government has that objective also to look forward to. A time-related differential may be argued against. For many years it's been argued for. Do you think this time differential should go?
The whole idea of the time was kept because you wanted to differentiate between an investor and a speculator. So somebody who's coming into the market and doing a small trade and then moving out. He gives liquidity to the market. He's a very important player in the market. But at the same time, whether he should be getting the same benefits or not is something which a decision needs to be taken. So I would say that while you are framing your policy, you can bring in new concepts. But this is generally the concept that is there in the capital gains where you try and differentiate. For example, last year I recall the housing market had come to me and said that for houses also we should have the long-term capital gains kicking in after 12 months. And my simple question to them was that do we purchase houses to keep them for a year and then sell them off? So suddenly there was a silence in the room. So I would say you have to keep all these aspects, and what you say is right. I need these players who come for very short while, especially in the financial market and the equity market, because they provide liquidity. But I also want people for the long term because they give stability to returns, they give stability to the market. So how do I incentivize is a decision we need to take. But at this point of time, I think rather than going whole stock and barrel and rethinking or reinventing the wheel, if we can take certain things for given and then make changes so that it is simple to implement, simple to understand, and people invest because the product is good or product is not as good, but not because there is a tax advantage.
Okay, we'll look forward to that. Let me also talk about one of the sort of reforms that was announced, but we haven't heard much about it. This is the alternative scheme for personal individual taxpayers. Depending on which side of the debate you stand, somebody would say it's bombed. Somebody would say, well, you know, there are still so many exemptions, people didn't find it comfortable. I ask you to set the records straight on this subject. What happened to that scheme? Because I don't know anyone in my circle who has opted for that.
There are some people who are opting for it. The numbers I don't have exactly now, but the numbers are very small. Let me be very candid with you. And when you analyze it, you find that a large number of people in India or who file returns show income of less than 7.5 lakhs. Maybe this number would be 75 to 80% of the people who file returns. Now, if I file a return like that, then under the new scheme, my tax kicks in at 2.5 lakhs, while under the old scheme, I don't have to pay any tax on it. So there is no reason that I should move to the new. So what you have said obliquely, I'll say it absolutely clearly, is that there's a need to relook at this whole scheme and come out with a scheme which has got less number of exemptions and maybe larger slabs, and the rate which doesn't shoot up from say 5 to 20 but moves gradually. And I think if we do that, there'll be a large number of people who will opt for it, and maybe at some stage the government can also think of, rather than having two options, have only one option.
Okay, that's a good approach. Let me also take up another point, which is GST. GST now, after 2017, there have been so many sort of reforms to the original concept. The practice has changed. A lot of difficulties have also been removed, and you spoke about the overall numbers. On the ground, sir, GST, if you were to evaluate it today, what kind of change do you see it having brought to our overall economy?
One thing is that it has brought in a lot of discipline in the financial dealings of the sectors. Be it corporate sector was anywhere there, but the small and medium and the individual proprietor partnership. For example, if you are supplying your goods to say, if I take just a name of a company, ITC or Hindustan Unilever, you will not be able to do it unless you're a GST player yourself. So that has brought in some discipline that if I want to do business with you, I have to be GST compliant. So that is the reason that the numbers of assessees that were just 70 lakhs in 2017 have gone over 1.4 crores now. So that's bringing in that.
It's doubled.
It's doubled. So the benefit doesn't come only in one way. The benefit comes in all ways. So these people have got formalized. They are showing their business income. They are showing their P&L and balance sheet very sincerely. Once they do that, then the income tax also has a benefit of that, because then you also have to ensure that your income tax return matches with your GST return. So all that helps the economy, and there's more white economy that is there today than maybe it was there before the GST days. And it also helps the businesses. I recall when before 17 or many years since I've come into service, especially the foreigners would come and say that your tax system is a maze. I can't understand. I move 10 kilometers and it's a different rate. It's a different process. So all that has also been eased out. So ease of doing business, getting the right money for the government, people paying the right taxes and being comfortable, and also ensuring that there's a matching of what figures you give to various agencies, MCA, CBDT or CBIC or the GSTN network. There is a matching of those figures, and if it is not being matched, then AI and ML is being used and you are being asked questions. So it has brought in this kind of a discipline, and we are now moving towards a very formal economy where the tax base would also go up, and there will be no difference between if I am doing a business or you are doing a business. Both of us have to follow the same rules, the same principles.
What are the drawbacks of the GST according to you?
I would say we still have a lot of things to rectify in that. In some cases where there's inverted duty, we find the manufacturer in our country would not be as comfortable, the trader might be. So we always have this conflict of interest, and there are a large number of items on which we have rectified in the 45th and the 47th meeting, but there are some items that are still left out. And then there's a desire of some bodies or some companies or some categories to be out of this net and seek exemptions for their products. So that is also one thing which we need to gradually remove so that these arbitrages go away. And one of the arbitrages that we did away was with the pre-packaged goods in the last system. Then the third is that there are some people who are still worked up on the number of rates we have and the litigation that we have. So there is also a need to have a relook at all this. Right now, basically, though people say that there are 6, 7 rates, but I say there are basically 3, 5, 12 and 18. 28 only has 28 or 29 items, and the remaining 0 or 3 are special category. So maybe there is also a need to look at whether this also can be shrunk into, and one rate could go away, so that it again the difference between similar products is not there, and they fall into one category rather than different categories.
Tata's and Singapore Airlines are setting their sights high with the merger of Air India and Vistara. The long-expected merger, finally announced today, will lead to Singapore Airlines owning a 25.1% stake in the new entity. The new airline, with 218 wide-body and narrow-body aircraft, will be number 2 in India after IndiGo. For more on this, we're joined by Business Today TV special correspondent Karishma Sudani. Karishma, what is the merger timeline looking like?
Well, Abha, yes, in terms of merger timeline, both the Tata's and Singapore Airlines have said it, that they're looking to complete the task by March 2024 if the regulatory approvals are in the right process. And post that, of course, Singapore Airlines will get close to 25.1% shareholding in Air India. Like you also mentioned, that the collaboration of Vistara and Air India will actually result in one of the biggest airlines for India, with a vast fleet of close to 218 aircrafts, and of course being the premier international and domestic airline in the country.
Thanks for that. Karishma, but tell us, is there any clarity on the financials of this merger?
Yes, absolutely. Like we know, it was early in this year, close to January end, that government had sold Air India to Tata's for about 18,000 crore, out of which 15,000 crore 300 rupees was close to debt. So ideally, it was a discount deal of something that's close to 2,800 crore. Now, since Singapore Airlines is being involved in this, they'll be investing close to 2,000 crore as their premier investment, and further going as and when needed, they have agreed to put close to rupees 5,000 crore. Not just that, in fact, Singapore Airlines has also mentioned that as per fleet expansion, as per demand and supply, and as and when modifications are needed, they'll be able to try and support and also seek investors in the future. But that looks like a promising investment to go with, and with a brand like Air India that's holding the identity of India's Maharaja and Vistara, which has quite set luxury domestic flying trend in India, and of course internationally as an Indian carrier, it looks like the combination is only going to try and take competition in the skies, not just in India but across the globe.
Karishma Sudani joining us there with the big news in the aviation space. Markets today logging record highs yet again, aided by an uptick in FMCG and metal counters. At close, Sensex was up over 100 points, close to 200 points at 62,682, after touching a record high for the 4th day in a row. Meanwhile, the Nifty gained 55 points to shut shop above 18,600. Asian peers also witnessed a rebound after China decided to support property developers to boost demand. Talking about some of the gainers, HUL, JSW Steel, Cipla, Hero Motor, some of the top movers today, and selling with pressure there on IndusInd Bank, Coal India, Bajaj Finserv and Eicher Motors, among others. With agencies and global brokerages slashing India's GDP forecast this year, analysts are expecting a substantial quarter-on-quarter fall in GDP figures for the July to September quarter, which will be out tomorrow. Business Today TV looks at expectations and the factors swaying the mood of analysts.
While Dalal Street has been run over by bulls the past few days, a whole lot of factors seem to be dictating global market trends, not all of them positive. Analysts expect India's gross domestic product, or the GDP, to more than halve quarter to quarter to 6.3% in July-September. The slump from first quarter of this fiscal comes as geopolitical tensions reinforced global economic headwinds. Amid these, a downside risk to growth also stems from declining demand. Overall, economists expect the incoming GDP figures to keep the Indian economy on track, with RBI's full-year guidance of 7%. Apart from State Bank of India, which has a slightly bearish view of economic growth at 5.8% in the quarter gone by, most firms like IDFC First, Deutsche Bank, Kotak Mahindra and Yes Bank peg Q2 growth in the 6.2 to 6.9% band. Some rating agencies like CRISIL and ICRA expect growth at 6.5%. ICRA in its report expected growth to be driven by the services sector, although a subdued trend is seen for industries, agriculture, forestry and fishing. A slew of agencies have also slashed their full-year forecast on India's growth. Goldman Sachs has gone ahead and cut it to 5.9% from 6.9%, whereas Moody's pegged India's growth at 4.8%. S&P Global Ratings has also revised its forecast downwards by 30 basis points to 7%.
For the year, we are at a 6.9% growth, while a lot of the multilateral agencies have been downgrading growth. Our original growth estimate for the year was at 7%, and therefore we are not too much deviant from that at this point in time. Going forward, I think the challenges will be on the personal consumption front. This quarter or the third quarter, personal consumption may have been relatively sort of better and resilient because of the festive demand. But given the higher interest rates and given the very fact that inflation continues to be sticky, the private consumption demand could struggle in the fourth quarter and in the quarters hence, because we are looking at a lag with which the monetary policy operates.
The Reserve Bank of India too has revised its 2022-23 growth estimates to 7% from 7.2% earlier. Like most central banks, RBI too has hiked interest rates 4 times this fiscal by a whopping 1.9% with a view to tackle inflation. There are, however, several headwinds which the Finance Ministry has said may drag India's growth down over the next few quarters. Though global commodity prices are falling, something which will ease inflation pressures, overall global economic activity has deteriorated amid monetary tightening. Exports are also expected to slump because of this. The first gusts of the headwinds are already being felt, with merchandise exports falling 17% in October to below the 30 billion mark, the very first year-on-year decline since February 2021. Bureau Report, Business Today TV.
BlockFi, one of the biggest crypto lenders, filed for bankruptcy late last night. As per its Chapter 11 bankruptcy protection petition, the company has up to $10 billion in liabilities and had exposure to Terra Luna, Celsius, 3AC as well as the FTX crash. To know more about this, let's go across to Akanksha Chaturvedi. Akanksha, take us through all that's happened with BlockFi.
Well, that's right. BlockFi, which was one of the leading crypto companies in the US, has filed for Chapter 11 bankruptcy protection in the US courts. It's worth noting that the company owes up to $10 billion to over 1 lakh investors and creditors. Interestingly, the company does not just owe to retail investors or to other companies, but also to the US securities regulatory body, the SEC. The company owes around $30 million to the SEC, which it was supposed to pay in the form of a fine or a penalty. But the company will not be able to pay it now that they've filed for bankruptcy. To put this into perspective, as per today's conversion rate, the $30 million fine would be equal to 245 crore rupees. It's a little bit over 245 crore rupees. This is like owing 245 crore rupees to the Indian SEBI, to the Indian regulatory body SEBI. Well, this week has been extremely choppy for the crypto industry. Not just BlockFi, another crypto company has shut operations today. Bitfront, it was a crypto exchange operating in the US. They shut operations today. They announced that because of the volatility in the markets and the conditions, across the industry, they would have to shut operations. So it seems like Indian crypto investors have been saved a lot of pain because of the government's intervention and the disincentive that the government had given investors. With the 30% tax and the TDS, many investors were dissuaded from investing into cryptocurrencies. There was a lot of pain about it initially when this was rolled out. But it seems like the Indian government might have saved many Indian crypto investors from a lot of pain.
That's where we leave it on the show tonight. Thanks so much for watching.